Fundamental analysis. Fundamental analysis is the method traders use to determine how economic indicators, which are news and events, and social and political factors worldwide, can affect the supply and demand of a currency, hence the currency's value. As a general rule, good fundamentals affect the currency in a positive way and tend to lead to currency appreciation or a rise in value. Bad fundamentals affect the currency in a negative way, usually triggering depreciation or a fall in value. To understand how you can use fundamental analysis while trading, let's first discuss the kind of economic indicators, social and political factors that can affect a currency, and then let's see how we can perform this type of analysis. What to look out for. Some useful indicators you can keep your eye on when starting out on the Forex market are the country's GDP, CPI, retail sales, and employment changes related to the currencies you've chosen to trade. These releases give you an indication of the overall conditions from period to period and can have a significant effect on the market when announced in major currency pairs. Monetary policy, central bank interest rate fluctuations, and NFP, or non-farm payrolls, are also key to follow when performing fundamental analysis. Social and political factors. It's important to understand that apart from economic data releases, there are other aspects that can affect the market sentiment. Social factors such as war, civil war, or conflict within a particular country can heavily affect its currency as, understandably, consumer spending declines rapidly, leading to business closures, sometimes rioting, and overall deterioration of economic activity. Therefore, traders may shy away from buying that currency or decide to open sell positions fast, causing waves in the market. Finally, political factors such as upcoming elections, major legislative decisions, or events such as resignations from top politicians can cause panic and uncertainty amongst traders, driving the currency price down due to a lack of demand for it. You, as a trader, need to focus on all the aforementioned factors that can affect the currency, alongside your technical analysis, before making a decision to buy or sell. So, where do you find this information? Economic calendar. The first thing you'll need to get your hands on to monitor news or events is an economic calendar. Your broker will usually offer this to you for free, and it will be located on their website. If your broker doesn't have an economic calendar, there are plenty of free resources where you can get one. Search for economic calendar in any browser and you will find one. So how do you use an economic calendar? It's quite simple. Select the date or week you want to focus on. All of the news releases will be listed for your selected dates. The importance of the release will be marked. Bear in mind that the more important the news, the bigger the market move could be. You'll be able to see the forecast, the previous result, and, after the news release is announced, the actual data. Usually, if the actual data differs significantly in comparison to the forecast, it will affect the currency, depending if it's better or worse than the prediction. If the actual data is close to the forecast, the market may not react a lot, and the price change will be small. You can use this information as an indication for which positions you should open, close, or keep. You can also use it to adjust your existing positions. There are lots of different economic reports released over the month. Your job as a trader is to watch how these releases affect the market and, combined with keeping an eye on the regular news, political and social climates, make informed trading decisions.